Hi, this is Zach Mir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 16th of June. Starting off with Aureus Mining, and here it looks as though we got quite an encouraging chart, really. We had the floor here for the shares just above 2 pence at the start of the year, then the rally attempt, and then a gap to the downside. A vicious move, but the shares didn't actually put in lower lows, so basically it's a bare failure. It could be an exhaustion gap rather than a sign of a new leg to the downside, and the upside here probably, at least while we hold 2 pence, would be to fill the gap to 6 pence. After that, a weekly close above that gap takes us up to retest that March resistance towards 10 pence over the following month or so. Basically, decent weekly close above the former May support around the 2.75 pence level should be enough to take Aureus higher and give us a decent bold move to the upside. Just wanted to follow up Avanti Communications, because I know a lot of people are bearish of the shares, but they did manage to deliver further upside from the initial turnaround above 50 pence at the start of the week. I was suggesting that we could get up to 85 pence even if the shares then fail again, and that looks as though that's still on. 85 pence would be the 50-day moving average and the top of this falling January trend channel. A weekly close above that then opens us up for a 100 pence plus target, which would retest that 107 peak from last month. Stop loss at the moment probably now up to the 20-day moving average at 72 pence rather than the 10-day moving average suggested yesterday, which is now at 62 pence. So probably risking 10 pence now to try and make 20 as a best case scenario, but obviously we are cautious. There have been full storms all the way down. On to Coal of Africa, which used to be a favorite, but then rather let people down. But at the moment, shares look as though they are well on their way for a decent move, a decent further move, in fact, on what they've delivered. We had that vertical move through the 200-day moving average at the beginning of May, tested that line of support, effectively a golden cross earlier this month, and good support here coming in above the 20-day moving average at 3.92 pence. While we hold that, I'm looking for 8 pence, which would be the top of a wide rising trend channel from July last year. Nice hammer candle there for Wednesday's session, and we've also got this multi-tested uptrend line in the RSI window, of which we've also bounced. So plenty positive going on there at Coal of Africa. GCM Resources as well, another encouraging looking play. The reason for the enthusiasm here are the last 3 support points above 10 pence on this uptrend line from the beginning of April. While we hold 10 pence, quite simply we're looking for 25 pence over the next 2 to 3 months at the top of this broadening 2015 price channel. Next up, Northcote Energy. And I know this has disappointed horribly over recent months and weeks, but it does look as though finally with this that gap to the downside there in April, it was essentially the beginning of the end of the bear run. Falling wedge here is a positive formation, and really looking to break this line here from December and the 50-day moving average at 0.035. Nice RSI break here as well through 50, leading indicator on upside, and and does suggest we should at least get back up towards the 0.05 pence level, which is the top of that April gap. After that, we can review and revise how strong this situation appears to be. Next up, stock which is relatively new to me, Triad Group. Nice little consolidation here above the 200-day moving average at 28.95 pence. Looks like a mid-move consolidation and a bull flag. Hopefully won't end in tears as the March consolidation above the 200-day line did. But in this case, we've got a break above a falling 200-day line, which is actually a very positive thing. If you're not confident about how well this is going to do, you wait for an end-of-day close above the 34 pence level, which is the initial June resistance, and then target the top of a wide rising trend channel from last year at 50 pence plus, and that could be hit over the next couple of months. Overall, we've had a uptrend here since the early part of last year. Stop loss at the moment back below the 50-day moving average and the floor of the channel at 26 pence. Finishing off with Tlu Energy, which we'll try and get for you now. Here we've got ongoing consolidation here above the 50-day moving average, taking a long time, but the good thing is that the 50-day line 3.76 is providing intraday support. We've also seen the RSI remain above neutral 50, it's at 54, so that does tip the current consolidation on the bullish side here for a long-awaited 6 pence target, only really back below 3.25 pence, the floor of this channel, would upset the idea of recovery here. That's it from me. More updates at the same time tomorrow.